people just kind of forget that in order to go from here to 150K, we need to add another $1 trillion to our market cap. And that's a huge amount of money. But then you also look at gold adding 6 trillion to its market cap last year, and you're like, well, it's clearly possible, right? If you just have gold and the amount that it went up in 1 year, that's a $350,000 Bitcoin. So you're like, we simultaneously have to respect the size. It's going to take longer. It's going to be slower. But you also look at it and go, and there's a lot of stuff that's possible, right? It's still a small fish in a very, very large pond. Bitcoin has broken free. It's like gold. Gold is
Mm.
going up despite real yields going up. That is a break in trend. There's 5 prices that I pay attention to. If I wake up tomorrow and Bitcoin has an 80,000 handle, I'm a happy camper because A, I've already thought about this. I'm prepared for it to happen. I'm kind of waiting and hoping it happens because for me, I'll be stepping in. And if we go to the flip side, if we just explode higher and we go to 150K, that is where pretty much every model that I look at is going to be extremely overheated.
Yo, dude, what's up, bro?
G'day,
Checkmatey,
mate.
James in the house. How you doing?
How you doing? Mate, thanks for having me back on.
Thanks for coming, bro. I'm a huge fan of your work, and I think it keeps us grounded and sane in these times, especially the chopsolidation phases of the market where people are just completely losing their minds. So I'm just gonna ask you right off the rip. When we're recording this, is February 17th. We're currently sitting at 96K. Is the bull market over? Is it done? Is the party over?
I mean, when I look at the price chart, like just look at the weekly, to me, it looks like it goes up and sideways, up and sideways. Like this is the sign of a healthy bull. Now, by the way, even if the market was to sell off, let's just say we go back to like 75, even if that was to happen, it still looks like a typical bull market correction by pretty much every metric that I look at. So yeah, it'll be rough. People will panic. People will capitulate. But does that mean that like we're going back to 40,000? I don't think so. And when I think about just like core levels here, if we go back to 40K, do we really deserve to undo the ETFs? Is that like, do we really deserve that? I don't think so. I think Bitcoin has grown up beyond that. Okay, so what's the next level? Well, 50K is a $1 trillion market cap. 60K is 1.2 and 70K is 1.4. In 2021, we tried to be a $1 trillion asset twice and we got brutally rejected. We then had 7-8 months of chop solidation, and every single time it got down to 1.2 trillion, it was bought up. So then I just look at it and go, do we deserve to be a $1 trillion asset? And you kind of look at the world around you, you look at Bitcoin, you go, yeah, I do. So therefore, I'm like, am I that concerned if we go back to 70K? No, I just won't have any money in my bank account. That's what's going to happen if that happens. So, it's just about kind of thinking about things and saying, look, what is the bull? The bull is when you go through like a multi-year period of just hellish downside. And I can't construct a case that convinces myself that we're going to have an 80% correction from 100K. I don't think we're going back to 20K. So therefore, if we have like a 30% or 40%, does that scare me? No, I've been through multiple 80s. So, where does the bull market end? It's a bloody good question, but I don't think it ends at 100K.
Interesting. So basically what you're saying, the TLDR is it can go either way.
Well, it could always go either way. And I think that's how I like to frame stuff, right? Because it could. No one knows, right? Something could happen tomorrow. But we went from this rally from 75 to 100, right? And we did that very, very quickly. And as we're now finding out, there's all these, 13F filings and all that. And you look at the cap table and there are some very, very serious players there. Now, they're not the entirety of what's going on, but, they're a pretty meaningful chunk. These are serious people, and they're serious people. There's some who are doing like cash and carry hedge fund style strategies, but there's also some just absolutely ginormous asset managers, Paul Tudor Jones, these guys who are, they're buying Bitcoin because they understand why. That's how we got up here. It's also why we're staying up here. So I think that's a thing to just really consider. We've had an enormous amount of sell side this bull. This bull has been at like off the charts in the amount of old coins coming back to life and just the amount of sell side. It's massive. And as you said at the start, we're at 96K, right? To be perfectly honest, I'm amazed we're not lower. Given the amount of sell side that's been going on, I'm amazed we're not lower. And this is what, I always try to frame these things up. Sell side is matched by demand. So when you're seeing a lot of sell side and the market's going sideways, That's telling you there's enough demand to keep us up here, which alone is a really, really impressive feat.
And could we talk a little bit about the sell side things of it? Because you're not the first person who's told me this,
Yes.
in the last week or so. But basically, I was told, like, TLDR, Nico, there's a lot of OGs that were buying Bitcoin at two, three, $400 a coin, and they're just selling it, to live their life, to buy the new house, to upgrade their lifestyle. So, could you talk a little bit about what you mean with what you mean when you say that there's a tremendous amount of sell pressure compared to the previous markets, and could you elaborate a little bit about where I don't know if you could know this for sure, but where is this sell pressure coming from?
Mhm. No, it's a great question. So the answer is we never perfectly know, right? But what we do is we look at, how the market trades, where supply is moving. And when I talk about where supply comes from, I want people to think about two different reference points. Where does it come from? Meaning the price when it was accumulated, and by kind of proxy, how long it's been held for. So keep those two thoughts in mind, the cost basis that it came from and how long it's been held. So they're the two things when I say where is it coming from. Now, in terms of the magnitude, naturally, as Bitcoin gets bigger, the dollars get bigger. So the same Bitcoin that was worth 10,000 is now worth 100,000. So there's a big delta there, right? That's obviously unrealized profit that's getting locked in. Now, where are these coins primarily coming from? We saw in the March peak when we had the ETF run up, we got to 73. We saw about $55 billion a month in sell side pressure. Those coins were coming from previous cycles, right? They're coming from the 2018-19 cycle, people who are gladly locking in like a 7.5 to a 10x, depending on where they bought. Some people would have bought at 3,000. Some people would have bought at 20,000. A lot of those coins were actually accumulated when FTX blew up to like 20,000, and they're locking in a 3x up to 75. The second wave, when we went to 100, we had $85 billion a month. So these are just absolutely enormous numbers. And again, the market is still up here, which is impressive. Most of the coins from this particular rally up to 100, the vast majority of them are coming from that chop solidation range in 2024. So they're locking in about a 50% gain, right? They bought somewhere around 50, 60,000. They're selling up here at 195. So that's kind of the ballpark of where most of these coins come from. Now, that said, there's a lot of supply at the moment right now coming from 2 years, 3 years, 4 years, that kind of bucket, which puts you back in the last cycle somewhere, right? Some of them are going to be coming from that 2018-19 cycle. And I think what's important to recognize that just because a coin is 2 years old doesn't mean they may have held it for 5 years, 6 years. They've just moved inside their wallet or whatever it is. And that's why I think a lot of people get stuck on, oh, but 6 months isn't really an old coin. It's like, but what if it's not 6 months? What if they've held it for 10 years and they've moved it every so often, right? People often say, oh, your on-chain data is broken because people do wallet consolidations. Like, no, it's not. People do wallet consolidations, but they don't do it every day, right? And it's funny because people don't the whole market, every Bitcoiner in the world doesn't go, you know what? Now the price is ripped from 75 to 100, I'm going to do UTXO consolidation right now. And everyone does it at the same time. No, coins come back to life when people take profit. So that kind of frames things up. I also think that it's important to recognize the buyers we have this cycle are different. We've got, the ETFs are just a vacuum for coins. You've got the likes of Sailor. You've got institutions, the Tudor Jones, all these guys who are interested in buying the ETFs or spot, whatever it is. They are offering a pool of capital that if you've been around for a long time and you've got 500 coins and you want to take a chunk off the table, you've got 1,000 coins, you now have buyers big enough to do that. You've never been able to actually take meaningful profit. You've now got buyers of size to take your bags of size, right? And you stick around Bitcoin long enough, we all love it. It goes up, it changes our lives. At some point in time, money, and I'm a big advocate for this, money should be used to improve your life, your kids' life, your family's life. Otherwise, what is the point, right? The only
Of
thing more
course.
scarce than your Bitcoin is your time. Some of these guys, they just don't want to have 100% in Bitcoin. They just want to have a little bit in some dividend stock so they can get paid for the rest of their life and never have to sell the rest of their Bitcoin. That's really where a lot of people get to at this stage.
Of course. And how big, and this is great insights, and how big do you think that amount of people are? Because if you break it down, right, I'm class of 2016. So I've been doing this for 9 years, right? And there is fatigue, and you're just kind of like, ugh. And I think the 2021, bull market underperformed in my opinion. I know we disagree on why. I come from the China mining ban. You come from the other
QETC.
angle. But like there's a part of me that's like, oh my God, Nico, I feel a little bit let down by this one too. And if you take a look at like the ROI from cycle bottom, right? Seems like it's closely aligned with the 2017 cycle. But if you look at the ROI from having, it's massively underperforming every other cycle to date.
Yes, but we
Um,
overperformed into the halving. So I
this is
actually think
true.
that I think I think the halving version of that chart, everybody should delete it from their usage portfolio because it's not an important chart because the halving is so irrelevant. It's so
Mhm.
irrelevant. It's not what drives the supply squeeze. It's not a thing. So therefore you may as well anchor it to the second Tuesday of May, right? It's basically the same level of accuracy. Whereas the cycle bottom, the reason why the cycle bottom one I prefer, I think it's the best version of it, because for that one there, that is a sentiment shift. That is a moment in time when everyone globally, every single person who went through FTX collapsing, you all felt the despair, the destruction, the everything. All of those emotions are everywhere, right? The halving, a bunch of people go, yeah, that's cool. But no, like it's just not relevant. But that cyclical bottom, it's a shift in human behavior, and that's why that chart in particular is really, really useful. So by that metric, I wouldn't be too upset with the cycle because we're following what was the most powerful of all bulls that Bitcoin's ever seen, right? So, like yeah, apples and oranges.
So and you said a word there that I really want to focus on because I think a lot of people, and you absolutely nail this. But a lot of people don't understand this about markets and how big a role sentiment plays, right? So if you were to describe the current sentiment right now, what would it be and what does it mean?
Great question, and the word I'd use is diverging because this has been the puzzle I've been trying to solve for the last couple of weeks, and it's multi-directional. Because Bitcoin sentiment is different to crypto sentiment, and this is a really important thing to kind of keep in mind. As I've kind of puzzled over this, because Bitcoin pulls back 5%, and suddenly the timeline is just bearish as anything. You're like, what the hell is going on? Um, People feel like this cycle has been underwhelming and all these kind of things. And I look at the chart, I'm like, it's like the most powerful, resilient, stable bull I have ever seen. I'm like, what are you on about? So I look at the chart and I look at the data. I'm like, this looks fantastic. We're absorbing tens of billions of dollars every week and the ETFs are still going up. Like, I'm like, this is fantastic. What's wrong? People's expectations for what the cycle should be. We saw this last time. People's expectation was that we had to go to 100K and we went to 29, right? So we're at 60. People are expecting 100. This is it's very human. It's very normal. You take your expectations, and then when it doesn't play out, you think something went wrong. But what actually was wrong was your expectations. That's actually what was incorrect. The market was sending you information, you chose not to look at it. So when I look at sentiment today, it's really interesting because to me, Bitcoin looks fantastic. And I've heard anecdotally, I've heard some people saying that in the institutional world, sentiment is good. Tudor Jones and these guys are buying Bitcoin. It seems good to me. Like everything so far, like I'm getting a pretty rosy looking picture here. Everything is fairly cool, calm, and collected. And as I said, even if we sold off, it's still within very tolerable means. But then you look at what's going on elsewhere, and occasionally you come across one of those polls on Twitter, like what percentage of your portfolio is Bitcoin, shitcoins, cash, whatever. And you see these numbers and you're like, my God, everybody's allocated to shitcoins. And I think there's two buckets here. The speculators have gone all in on the Solana and the meme coins, or they've gone all in on MicroStrategy call options or the stock. And I think what's basically going on is that the sentiment is destroyed because the volatility in MicroStrategy stock, and I know a lot of people bought MicroStrategy low. They now, most people bought it high. Let's face it. That's how most retail traders did not ride the run from $10 to $500. Most people have ridden the road from $450 to $330. That's where, and bought call options expecting $1,000 and they got 330. So, and that, by the way, when you buy a call option like that, your money goes to actual zero. So that's just like complete capital loss. And I think that is why we have this like diverged sentiment. In the crypto world, it's been very selective. Only a handful of coins at the right time. It's been very fleeting. I ran some analysis on this recently. Previous cycles, you get this like structural long-term bull where, shitcoins, they perform and you get this like capital inflows and people go into profit. It's like a sustained process. This cycle has basically been, it looks like a pump and dump. When you look at how many coins are above their 200-day moving average, how many coins just aren't bearish, people are just in profit, it goes up and it goes down immediately. So it's like this, like you got to be in the right Telegram group and no one is. So what's basically happening is it's just this like mass value extraction and people feel robbed because they've actually got zeros on their balance sheet. So I think that's where sentiment's coming from. You've actually got Bitcoin spot, which is kicking ass and nobody owns it. And I think that's why sentiment is so destroyed and shot. Not enough people bought the thing that won because they thought everything else was going to beat it. And Bitcoin just comes in and goes, no, mate, I'm going up. And they just got wrecked, right? They got wrecked by the chop, which is just brutal.
Yeah, I mean that's an incredible analysis, and that's so spot on because I think what we saw in 21 was a massive in the specific year. We saw a massive outperformance of a lot of altcoins versus Bitcoin in a specific
It was a rising
time.
tide lifts all boats too. Everything went up.
It was a specific time period, right? Because if you've held an altcoin for the last 3 years compared to Bitcoin, you've gotten absolutely wiped out, right? But there was a specific time period in 21 where if you bought an altcoin, you outperformed Bitcoin for a short period of time. And I think you've just laid out essentially where, MicroStrategy performed incredibly last year, but did you buy the bottom, right? Most people didn't. Most people saw the 5X or I think it was like 4 or 5X. And they're like, oh my God, this is going to keep going. And it didn't. It just peaked. And then, the meme coin rotation mania, which has been insanity to the point
This week
where
particularly.
nation state presidents are jumping in, right? Like it's been absolute madness. And it's such intense PvP. Like it's so fast, so short. And I don't even know how any of this stuff is legal, to be honest with you.
I don't think it is.
Right.
And I think that's actually another thing is that in 2021, because of all the helicopter money and the stimulus that came in, it was player versus environment because there's all this extra money flowing into the space. Whereas this cycle, it has not been that way. Bitcoin has seen genuine true capital. That is why we're chopping sideways for 3 months above 95K, right? It's incredible. That is real new capital coming in. In the crypto world, we have not seen, in my opinion, serious new capital coming in. So it's just basically money comes out of Ethereum, goes into Solana, comes out of Solana, goes into meme coin. So it's just like, it's PvP. And, these meme coins are engineered pump and dumps. Like they have marketing teams. I listened to a interview yesterday, which by the way, if you want to understand what's going on with this Harvey MLA thing, CoffeeZilla did this. He interviewed the guy who's behind it all. Oh my God. You just look at this thing, you're like, it is engineered pump and dumps to the nth degree. And this stuff just goes to zero. It's literally just people pulling cash out of the market. So it's PvP, but it's actually worse than that because there's leakage. The scammers are actually taking money out of the system and saying, thank you for my dollars. I'm going to go and buy myself Lambos, and just milking all these people who pull their money out of different coins. It's just value destruction. It's really bad.
100%. Yeah, no, it's total chaos. I agree that if you're staying humble, stacking sats, if you're in Bitcoin, you're fine. The only thing that I would say is you're in Bitcoin, and I think that to me psychologically, this is where perhaps it's been like it's just boring, right? Like you're obviously your net worth, it's holding steady. You're very happy. 3 months ago, we were at 60K. But perspective is important, right? A lot of people forget. right? 40% in 3 months is incredible. I don't know if that's
And
the
we've got to
correct math.
remember that's
Yeah.
40% in a multi-trillion-dollar asset, right?
Mm-hmm.
So, this is something else I've been banging the table on is this concept of how big Bitcoin actually is. It's simultaneously the biggest it's ever been, and it's tiny. It's small. It's massively small. In fact, I was looking at some numbers this morning. Some of these big firms, they've got like 0.0001% of their portfolio allocated, but they're multi-trillion-dollar businesses. So they're like, people kind of forget that in order to go from here to 150K, we need to add another $1 trillion to our market cap. And that's a huge amount of money. But then you also look at gold adding 6 trillion to its market cap last year, and you're like, well, it's clearly possible, right? If you just have gold and the amount that it went up in 1 year, that's a $350,000 Bitcoin. So you're like, we simultaneously have to respect the size. It's going to take longer. It's going to be slower. But you also look at it and go, and there's a lot of stuff that's possible, right? It's still a small fish in a very, very large pond.
Yo, I want to tell you about the best place to build your automatic self-custody Bitcoin stack. I'm talking about bitcoinwell.com. What makes bitcoinwell.com different is that it's a completely non-custodial platform, meaning as soon as you buy Bitcoin and the funds clear, it goes straight to your self-custody Bitcoin wallet address. And that perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support Bitcoin on-ramps that are self-custody by default. To get started, go to bitcoinwell.com today. It takes 2 to 5 minutes to sign up, and bada bing, bada boom, you're ready to buy Bitcoin.
Can we talk a little bit about that too? Like how small Bitcoin is in the grand scheme of things? Because remember, it was a very, very good chart, but basically like Bitcoin's a $2 trillion asset, and you're talking about 900 trillion, I think was the number of global wealth. And a lot of that is, or at least is the case that, Sailor makes essentially, is that a lot of it's Bitcoin's this black hole. A lot of that value is going to go into Bitcoin as people realize like real estate is inferior. Art, is another big one. I don't know why you'd buy that, but hey, you know what? So be it. Equities, et cetera, et cetera. People come to realize, Bitcoin is a superior asset. Bitcoin is outperforming everything. That's the case. But, when you say like Bitcoin is pretty small, what are you comparing it to? Since it's a $2 trillion asset, I mean, $2 trillion asset that sounds pretty big from my perspective. And just to kind of give, just so that people could like visualize this in your head, El Salvador has a GDP of 33 billion, right? So, Bitcoin is pretty massive if you compare it to certain things.
Yeah, I mean, it's what is the 7th biggest asset in the world. So it's sizable enough that it's competing now with the biggest companies that exist, which is the Apples, the Saudi Aramcos, right? Silver, it just flipped silver. Silver didn't even try and fight back, just got wrecked. And then you look at like gold is kind of the biggest in the room. But then you've also got to look at just the size and scope. And I know Nick Barty has talked about this too. Like some of these entities, they can borrow money cheaper than everybody else, and they can, they can leverage up bonds and all this kind of stuff. There's money that can just come out of nowhere. So the size and scale of these things is something else. When you look at the ETFs, for example, they've taken in about 40 billion. Now, my just rough back of the envelope checks, the ETFs are about a fifth of the market, thereabouts, right? It fluctuates, but something around there. So if you've got 40 billion coming into the ETFs, times that by 5, that's 200 billion in demand. That's pretty much about right. Now, I look, these are not supposed to be perfect numbers, but people talk about this like money multiplier effect concept, right? You put $1 in, what's the impact on the market cap? Too many people talk about 100x. It's bullshit. It's something closer to 3 to 5 by my calcs. So if you take that, the ETFs are 40 billion. They're about 20% of the demand, so that's 200 billion. So let's just say we got $200 billion of money coming in. If the ETFs were to double in size, that's approximately what that means. By my calcs, it will take to get us up to 150K, that's $1 trillion market cap. You need about 200 billion to get there. So the ETFs would kind of have to almost double to justify us moving up to 150K. Now, these are going to fluctuate around. This is not perfect numbers, but gives you a bit of a sense of scale that things have to get quite a bit bigger for us to move up to new levels. So 50% today is not the same as 50% back when Bitcoin was $100. It's a whole different animal. It is much bigger, but we are also dealing with entities who have that kind of balance sheet, right? If the companies on these 13F filings, if we just bring them up to 0.5% allocation, that takes us up to like, it's like $130 billion. Like, then that's just the demand that's going to go into the ETFs times that by 5, right? So the numbers are just enormous, but it's also going to take, you've got big money coming in, but you've also got a bigger target. And this is why things slow down. There's more time to chop around and consolidate. Derivatives are going to continue to expand. Some people say that's suppressing the price. I say you can't actually hedge your risk if you don't have them. So without derivatives, we actually can't go higher. There's all these dynamics, right? We are watching an asset class mature and reach a like global scale. It's amazing that we're even watching this, but I think people's expectations can run away with them because they expect, 2017 100x type returns, maybe, but probably not over the next year.
So is it getting boring in the process? Like, is it, is Bitcoin boring now? Is it just becoming, like a big tech stock? Like, because I think a lot of, like I remember seeing, James, I remember seeing a Google Trends. If you take a look at Google Trends and you put Bitcoin, you search Bitcoin on Google Trends, we actually haven't peaked since 2017.
That was the all-time high. Yep.
That was the all-time high on Google Trends for Bitcoin. That tells me that we haven't seen retail interest. We haven't seen euphoria level retail interest to the levels of 2017 since 2017. And I think a lot of us, we came to Bitcoin during that era. We remember those days. Are those days over? Is it just going to be a slow grind up and to the right, and these explosive moves of, I mean, it's pretty explosive seeing 60 to 100K in a very short amount of time. So, but are these explosive moves of, I believe 2017 was 20x. Are those days long gone? Are the years of 200x, 300x, 500x, are those days gone? Is it going to be just this slow grind up? And in the process, if it is a slow grind up, you could make an argument that, 50% return in a year is absolutely incredible. But compared to Bitcoin's past, it seems a little boring. What would you say to that?
Yeah, this is a great thought, but think about it from this perspective. This is the whole idea of compound returns. This is why you actually want to buy and stay in an asset. This is why. Because if you start buying a stock or you start buying Bitcoin in its early years, which I would argue we have left, we're kind of in that transition point into the more mature years now. Yes, the percentages may shrink, but suddenly you're talking about big dollars here, right? So if you were the owner of a single Bitcoin, right, 50% back when it was $100 gives you an extra $50 in your pocket. You can go and get 2 hamburgers. 50% now gives you $50,000. So what happens is your percentages decrease, but the dollars that's moving are much, much larger. So basically, the longer that people stick around and hold any asset, this is the same for anything, the percentages will decrease as it gets bigger, but the amount that moves, how much that changes people's lives gets much larger. And you'll often see in Twitter, people will say, oh, it's down $10,000. It's like, yeah, that's 10%. Like in a percent terms, and that's what a lot of people think in portfolio percentages. So when you think about a 10% drawdown, it doesn't look scary, but that's a $10,000 move, right? That's a significant pullback for most people. But it also works on the other side. And I think it's important to remember that as we get bigger and these big firms come in, so where we're leaving the retail dominated world. And I do believe a lot of retail have not actually come into Bitcoin. I think they're going into everything else and kind of paying the price for that. Bitcoin, I view it as a savings technology. For me, it's never boring because I write my newsletter. I always find something fascinating to write about it. So for me, I'm endlessly engaged. But when we think about how people kind of behave in these markets, the more that Bitcoin chops around, the more it actually changes the dollar value, right? So people's savings are going to be affected by this thing. And that's what I find with a lot of my subscribers. People say that, this is my life savings. I actually want to understand what it's doing, how it's moving, because I treat it that way. And the final thing I'll say is that retail, when we come in, we earn our paycheck, we put money on the table, we buy spot. Because we had to earn the money to buy these things, to buy the Bitcoin in the first place, we respect it a lot more, which means we actually can weather 75, 80% drawdowns. You wait, and this is what Nick Barty has been talking about. You wait until these institutions start borrowing some other guy's money and they know they've got a bailout behind them and they can start to juice these returns left, right, and center. What's going to end up happening? The volatility can actually explode in both directions, but to the upside as well, because these institutions can over-lever themselves, right? So we're dealing with much bigger weapons now, which means, yes, the volatility can compress most of the time, but there will be periods of time when Bitcoin just absolutely rips faces and it explodes to the upside. There'll be volatility in both directions, but some of these hedge funds and things, they can blow up as well. And they're blowing up knowing that they've borrowed someone else's money and they've probably got a bailout behind them. So that's where the real volatility can come from and actually get more insane as the numbers get bigger.
So let's talk about that. The institutions, right? You're talking about all this big money that's flowing in, and all this insane amount of interest. So who is this? Are we talking about pension funds? Are we talking about the ETF BlackRock? Are we talking about nation states? Sovereign wealth funds? Like, who is this big money that you're talking about? Is it here? Is it going to continue to just buy a Bitcoin? How do they view this asset? Because I think we've really seen, I think 2024 was the year that Bitcoin entered the mainstream political discourse. And I think, at least here in the United States, there was a specific party, trying to be inclusive in my messaging here, that took let's say a hostile stance towards the industry, and they really made a big bet. And I think you can make a very strong argument that they lost the election because they took a specific stance on the entire industry, and they essentially galvanized our industry. They forced our industry to throw our hat in the ring, and now all of a sudden we have a seat at the table in Washington, D.C. Bitcoin has become part of the lobbying the lobbying class, so to speak, which I find absolutely hilarious. In a way, 3 days before Trump gets inaugurated, Trump coin. It's insane.
It is.
But what is this big money? Who are you talking about? What are you seeing that the rest of us aren't seeing?
Yeah, so I think the funny thing is that no one can't see this. At the end of the day, if you look at the Sharpe ratio performance, which is what a lot of these fund managers work off, if you look at the performance of Bitcoin and you just are intellectually honest, you cannot say we should have zero allocation. So we're starting that there's different pools here. There's going to be, in the early days of the ETFs, I think there's two main buckets that have come in. The first one is probably people like you and I being like, hey, cool, I can put my retirement assets in here. I think there's been a lot of Bitcoiners who've gone, great, now I can put some retirement money into this thing. And I just thought about it, right? Bitcoin's 16 years old. Where is it going to be in 35 years when I can access my retirement? Probably not 100K, guys. It's going to probably be quite some chunk larger than that. So I think there's a lot of that, which is going to be asset managers. It'll show up as like the BlackRocks and the like holding those assets. But you've also got a lot of hedge funds, but also big firms who are just like, you know what, I can do a cash and carry trade. I can buy spot. I can sell futures. They still have to buy the spot position. But so long as there's like positive momentum in these markets and futures trade at some kind of a premium, they can essentially just buy the spot, lock in that arbitrage, and they just keep rolling that position, right? They're holding those coins. There's going to be the likes of pension funds. And this is really what Michael Saylor's been trying to tap into. Some of them can only buy a certain allocation to bonds. He's creating bonds that have a Bitcoin tether or a Bitcoin tie. He's creating these bonds that service the role of these pension funds. We're seeing Allianz was like 25% of their demand. So at the end of the day, institutions are profit-motivated actors. If they take a directional bet, it's usually going to be a long-term one. This is where you get your pension funds, your sovereign wealth funds. These are long-term asset allocations, same as gold. You'll see some hedge funds that come in just for the trading aspect, just for the cash and carry, just for the arbitrage. They'll lock in premiums on options. All of these, like this is the thing, Bitcoin is now maturing into an increasingly complex asset. And I think that's what a lot of people miss, is that we really have to look at what's going on in options, in derivatives and futures, in spot, in exchanges. All of this stuff matters. ETFs, these are just all different lenses into how Bitcoin is trading. And if anything, your favorite Bitcoin hater, Mr. Tradfire, who's been rallying against it forever, I bet you any money on a Sunday, if something happens in the world, he will be posting a Bitcoin price chart on Twitter because it's the only thing that tells him what his stocks are going to do on Monday morning. It is the global index. It tells us where liquidity is moving. It's a signpost. And that makes it immensely interesting for everybody, from traders, investors, hodlers. It is the asset you have to have on your dashboard. And I've spoken to some serious, money guys. That is their dashboard. They have Bitcoin as one of their indexes because it tells them information. That's what makes it so interesting.
100%, because it's trading 24/7, right? Like today,
It's the only thing that can respond.
it's President's Day, right? So the stock market is closed. There's also been some things where, on the weekend, Bitcoin drops like 15%. The stock market that Monday is going to start off rough. So I 100% agree with you. It's the actual thing that really does have a, pulse on the finger on the pulse of the global markets without any type of government interference or any type of, any type of, nothing could really stop it. It's always ticking, right? It always has that heartbeat. So that's a really, really, really good way of putting it. So I think my next
sorry,
question.
just to jump in there, the thing
Sure.
that fascinates me, this is why on-chain data is so interesting. On-chain data is the sentiment of all the people who hold that index. That's what makes it so interesting. I get to see when people are buying high, selling low, doing good decisions, making bad decisions, hodling, whatever. That's what on-chain data is so interesting for, because it's like this immutable record of our human decisions. That's what makes it so fascinating. So if Bitcoin is this global asset that tells us about the world, I want to look at the sentiment of the people who hold this weird thing, right? That's endlessly fascinating.
It's alive. It's alive.
Totally
So
is.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledin has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally have not only an account with them, but also a loan. And some of the key features that I love about Ledin is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you could pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to hodl while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you. Check out ledin.io today.
my question to you is, how much, there's been so much talk about the strategic Bitcoin reserve here in the United States, right? Trump promised it during the Bitcoin 2024 conference. You have Senator Lummis, trying to pass the Bitcoin Act legislation. There's tremendous amount of work being done on the state level. There's other countries that are talking about it from a legislative perspective. If this does come to fruition, if there is a strategic Bitcoin reserve that happens either in 2025 or 2026, what happens to the price at that point? Is it going to play a role in the price? I'll put it to you this way. What happens when governments that have an ability to just print money out of thin air use that power in order to buy something that has absolute scarcity? Something's got to give in one direction or another.
Yeah, and I think, look, that for me, I'm a bit more measured on the Bitcoin reserve. Like personally, I would actually rather it doesn't happen. My core take here, if it happens, we'll talk about that in a second. If it happens, it's going to be good for the bags, no question. I don't think the US needs it, should do it. I don't think it's a thing that is kind of relevant. What I do think is a better approach, and in my view, the signal from this whole SBR talk is that Bitcoin is now being talked about at the level of gold, right? That's the signal. That's the important piece of information. And when you think about why does this matter in terms of number go up, gold doesn't add $6 trillion to its market cap. because old mate's going down the coin shop buying a 1 ounce coin, right? It's because central banks are large enough to move an asset like that up $6 trillion. That gives you an idea of the scale of this thing. And again, that's just the move that gold had. That would put Bitcoin at a $350,000 coin if it had a 6 trillion market cap. All right, wild stuff. So that's the first thing. So when we look at that's the scope and scale of how big these institutions are. But my take on the SBR, and I think the better approach, I think the SBR should come within. America has all of the ETFs. Sailor is a company that's American that has a bunch of Bitcoin. Americans by dollar value hold the most amount of Bitcoin. By the US making Bitcoin an asset that should be held, that isn't rallied against, that isn't treated unfairly, and that people feel comfortable and safe owning, you actually make Americans wealthier. So the SBR comes from within. By the US making it a favorable, now that doesn't mean they're going to give it favorable tax treatment or any of that stuff, but just saying, via the BlackRocks, via the Fidelities, you should probably have a 1-2% allocation. That money comes into Americans' pockets. And what happens when Americans have more money? They spend more money. When they spend more money, they generate GDP. When they've got better savings and they're better off, if your populace does well, and this is Trump's policy. Trump's policy is about Americans, right? With the idea that if you help Americans, eventually it will be good for America, right? It can be some pain in that because the process hasn't been that way. It's been, we're going to favor America, which is the borders and Washington. Trump is now flipping it around saying, I'm going to be good for Americans. It's going to be a little bit painful in the short term, but it's going to be much better in the long term. That's what Bitcoin is. That's low time preference. That's the whole purpose of it. So if you make Americans better off by saying, hey, you should probably have an allocation to this thing, and then the thing does what it's probably going to do, which is monetize and keep getting bigger and bigger, you actually end up with the same effect. You get a wealthier nation and everybody actually wins. So that's my view. And I think that's actually the most positive way to think about it.
It's very interesting. I haven't heard that perspective before, but I agree. Bitcoin is a bottom up movement. I think
Absolutely.
inherently so.
Keep it that way.
Yeah, and I think it was with what happened with El Salvador was a very interesting phenomenon, right? Where they tried to do this top down current legal tender approach, was not popular at all. It definitely is a bottom up movement, and it doesn't kind of require any central authority, any central coercion. It's just its incentives are going to drive adoption more than anything. So I completely agree with you. Now we are in February, right? And kind of circling back to what we were talking about earlier in regards to, cycle bottoms, the cycle top. We are in February. I think a lot of people are getting antsy. I think a lot of people are saying, what's going to happen next? What are your expectations for the rest of the year?
Yeah, so I'll talk about kind of my general framework for the current environment. I think 2025 is going to be a choppy year. I don't think it's going to be as easy as a lot of people expected, where it's just going to be money printers going off and number going up. I don't think it's going to be that easy. The world is adjusting to a lot of change, right? Both in terms of what's going on with the US and the new administration, but there's geopolitics in play. There's all, there's conflicts everywhere. There's all these dynamics that are just changing, and change is what creates volatility in markets. And at the same time, there's a lot of things that, maybe tariffs as they start to develop and we start to kind of see the lay of the land there, that can change how companies invest. I just don't think 2025 is going to be a money spigot, money coming out the walls, helicopter money. I don't think it's going to be like that. So if that's the case, then we probably should just expect a little bit of choppy behavior, because if Bitcoin is going to respond to liquidity conditions and it's not going to be the perfect smooth sailing, there's a lot of debt that's got to get refinanced. That takes money out of the system. Remains to be seen how much Scott Bessent can issue on the long end versus the short end. There's no reverse repo facility anymore, which is kind of that, for want of a better term, easy money to finance the government. There's just a lot of things that aren't going to be simple. So my view is it's probably going to be choppy, but I still think it's going to be net positive. I don't think Bitcoin's going to end the year at 50K, right? So I think it's going to be generally net positive, but I do think just keeping your expectations grounded that it may not be as clear sailing as many people expect is probably a good way to think about it. Now, in terms of the kind of immediate term, I've mentioned 75K as like a potential. I do have it as a non-zero probability, right? So below 86K, basically no coins transacted on the rally higher. It's what I call an air pocket. So that's kind of an area of demand that the market actually doesn't know how much demand is between 75 and 85. There's no one actually knows because so few coins transacted there on the way up. Very often markets like to test those kind of levels. Now, if we get down to the low 90Ks, that's the short-term cost basis. That's like a pivot point. That's when, and just imagine yourself, if price went to $90,000, I would say the vast majority of people listening here, you probably wouldn't be decimated, but you'd probably be a little bit uncomfortable. It would probably be your discomfort level. You've probably got a bunch of sats that you've stacked, I have, which are going to be at a loss at that point in time. So 90K is that pivot point. I expect that I think there's still a 50% chance that we get there, right? So, and if we get there and we lose it, then it can be a quick drop down into the 80Ks. Does that kill the bull? I don't think so. I don't think so, right? I would be very surprised if that ends up being so. More often than not, markets that want to move, and that's another thing, the market right now, the spring is literally as coiled as it has ever been. The 90-day trading range has never been tighter. This market is ready to move. More often than not, and I've seen this so many times, the market, if it wants to go higher, and again, we're in this structural, monthly, stair-stepping bull market, sometimes to go higher, you have to go lower, right? So this spring is coiled up and ready to go. If we were to sell off from here, that is not a point. For me, I'm not afraid. What I like to do is I like to think about my plans in advance. If I wake up tomorrow and Bitcoin has an 80,000 handle, I'm a happy camper because I've already thought about this. I'm prepared for it to happen. I'm kind of waiting and hoping it happens because for me, I'll be stepping in. And if we go to the flip side, if we just explode higher and we go to 150K, that is where pretty much every model that I look at is going to be extremely overheated. That doesn't mean we can't keep going, but the probability of us still going is like 5%. So that's how I think about it at the moment. I've kind of bounded my zones. I've worked out what I'm going to do. If we go to 150K, I'm probably not going to buy at 150K. I'm going to wait until the market solves and works out whatever it has to do, whatever the next choppy period looks like or correction. But I'm probably not going to be buying 150K. I will gladly buy 80K, and I'm kind of not that mad buying at 90K. But 150 is a whole different ballgame.
Yeah, so this is what when you're talking about the coiled spring, right? This is from your website. Weekly choppiness index is about absolutely juiced and ready to go. So what do you mean? Could you elaborate a little bit? Like, what does this mean? What does this line mean? By the way, for anyone who's interested in this, go to James' Substack, subscribe to it, put it in the video/podcast description. What is this coiled spring, James?
Yeah, so the choppiness index, as you can probably imagine, that's where the chopsolidation got its name, consolidation and chop. The choppiness index is the only technical tool that I use from TA. It was originally developed for commodities, and basically the way it works, if you've got 10, I use a 10-week period, 10-month period. If you've got 10 weeks where the candles are all chopping sideways, the range of all those candles is, for want of a better term, contained. That's going to give it a lot of energy. So a high choppiness index simply means that the market has chopped wood for long enough, right? It's ready to go. It's kind of recharged its batteries. And if you spend any time in markets, you know they don't go up or down in a straight line. They go up, they correct, they consolidate. They have to have periods of rest. So the choppiness index across monthly, weekly, daily timeframes, it just helps me. I'm not trying to be pinpoint accurate. It's just trying to tell me, when is the market ready to move? When is it probably need a break and have a rest? And right now, on the monthly, we've still got plenty of juice. So on the monthly trend, we expended about half our energy. So we spent 8 months building up energy in 2024. We expended half of it to get to 100K. If we go to 150, I would say we probably would expend the remainder of it. That's your monthly. I'm now going to expect a monthly scale chop/correction if we get up there, and that's gassed. Right now, the monthly is about halfway, so probably I think it wants to keep going higher. The weekly chart needed a bit of a break because within the context of a monthly swing higher, you have weekly corrections. Every single bull market is made of lots of weekly bulls, weekly bear, weekly bull, weekly bear. And every single weekly bull is made of daily bull, daily bear, daily bull, daily bear. So markets are fractals inside each other. And you could go to an hourly chart and you would see the exact same pattern as a weekly chart because the market moves in these fractal patterns. So the general framework here is that the spring wants to move somewhere. We've got enough energy on both time frames. Sometimes it's got to unload to the downside to give it that slingshot potential to the upside. But again, and I know it's a meme. I know people are like, oh, he just said it goes up or down. We don't know. It's like, I don't know. And my advice to most people is accept that none of us do. Once you accept that nobody knows where the price is going to go, just build scenarios, because you can't control the market. You can't do anything about it. There's nothing you can do. The only thing you can do is make your decisions. You can only change your decisions. So for me, my decision framework, I'm quite happy stacking as close to 90 as I can. I'm very happy stacking below 80K, although I assign a lower probability of getting there. And if it goes up higher, I'm less inclined. I've made these decisions ahead of time. Don't worry about predicting the market. You can't do it. Focus on what your decisions are going to be when it happens.
This is great advice. Great advice. So, and let's talk about that 150K number. What is it about 150K that sets off alarm bells in your head where you're just like, you know what? This is overheated. The Bitcoin doesn't seem attractive to me at these prices. I'm looking more so at 80K. If I see below 80K, this is a gift. 90K is great. What is it about 150K that makes you feel, let's say, this is toppy. I don't like buying at this price.
Yeah, so the way I frame things up in my reports, because I have a wide audience. Some people are traders, most people are hodlers, some people are retirees. There's people from all different walks of life. And I try to give people two personas, because then they can better draw the line that best connects with their personal position. So I use Check the Analyst, who's supposed to be very objective. Just read the chart. Do not have any opinion. Just come up with an idea of what I think is likely. And then Check the Hodler is all of us who goes, I want to buy corn, right? I love buying Bitcoin. It's like, it's my savings vehicle. I'm here for the long term. What do I do with that information, right? In my personal scenario. So Check the Analyst, there's what I call my topping cloud. Again, this is not a prediction. This is purely just levels where if we go to 120, 125, we get to the lower bound of that. Now, what is that topping cloud? It's an area where people will probably have seen MVRV, these oscillators around using on-chain data. That is describing how in profit the average guy is, right? Now, what creates sell-side pressure? There's two things. The market sells off and people panic because they will think it's going to go lower, or the market rips and they take profit. They're the two things that cause people to sell. There's also boredom, but that's a different thing. When the market rips up to 120 and then to 150, we start getting 1 standard deviation, 2 standard deviations, 3 standard deviations above where we typically get to. It's basically telling us that the market, historically speaking, just doesn't get that stretched. Too many people will be in too much profit and they're probably going to take it. They might not. We may have a cycle where hodlers just go, I'm never selling any coins, and it just keeps going. It's very possible. Would Check the Analyst bank on that? No, because that would be wrong. The statistics tell me that there's about a 5% chance. Now, by the way, these are moving targets. The more that demand comes in and absorbs sell side, the more the market is saying, you know what, I'm actually comfortable with these levels. So demand, these are moving targets, and they're not targets even. They're just zones where I expect people will start to really sell. And what I then do is I say, well, if we get up to that zone, I'm then going to look at the sell side pressure and say, is it ramping up? And I can say with probably 95% confidence, it's probably going to be ramping up. And when we get to 150, if I just kind of ballpark describe what's going on, we will have euphoria on the timeline. Sell side pressure will be ramping up. Profits will be ramping up. Coins older than a year will be ramping up in terms of their spending pressure. Funding rates will be blowing through the roof. Options premium for calls will be up through the roof. And there will be no ceiling, will be the narrative. And Michael Saylor will do a $10 billion raise and buy the top. And GameStop will do the same. Once we see those conditions, I almost guarantee you that that's going to be a top. Now, this is another thing that people should know. What top matters to you, right? For Check the Analyst, the top that matters to me is the one that's going to create some kind of correction or consolidation period. It could be the top, right? Which is like, we've then got a 2-year bear market that follows. It might not be. It could just be a top. We could have 12 months of chopping sideways and then away we go. Who knows? So understanding what top matters for you. If you're a retiree, that top might be your top. If you're a leverage trader, the top that blew you up yesterday is probably the one that mattered to you. So understanding which top matters for your time frame is so important, because too many people are looking for the top. Go back and look at the Bitcoin price chart. Where was the top? Which one? Because we're basically at all-time high. So which top matters for you on what time frame?
Gotcha. That makes a whole lot of sense. And do you think, because like historically, what's been happening the last cycles really is that Bitcoin has tended to peak before that like 2-year bear market or 1-year bear market around roughly the same time, right? Give or take, right?
Usually like December, right?
Yeah, usually between October, December of the year after the halving. I'm not saying that's going to happen this year, but historically, that's what's happened every single time in Bitcoin's history. Do you think that era is over now that ETFs or institutional players are in? One of the narratives that I've heard, James, is basically like, you know, when MicroStrategy are in, when Larry Fink is in, when the ETFs are in, they're not going to allow 80 to 70% corrections. So those days are over. Do you think, it's kind of like we have these corrections of 30, 40%, but 2026, instead of it being an expected bear year, actually is just kind of like a sideways year, or maybe even just a continuation of the bull market itself. So just, I guess the short way of saying my question is, are cycles still a thing, or are they still going to continue?
I definitely think if there's a time for it to change, it's now. I would generally avoid thinking that Larry Fink's going to save your bag. So I would avoid thinking that they're not going to allow anything to happen. They also can't control where the market goes. The market is bigger than even them. So in my view, it's one of those things where I use this saying that the bull market will author the bear that follows. If we go to $1 million this cycle, we're probably going to have an 80% correction. If we go to 150K, we're probably going to have a 30, 40, 50% correction, right? That's kind of the ballpark to think about this. If the bull market is just untethered and just vertical, your bear market's going to suck, right? But the more stable and collected this thing is, gold had a 50% correction back in 2012 to 2016, something of that order of magnitude. It took a long time to play out. I don't think Bitcoin will take that long to play out, but we didn't see these big, nasty 80% drawdowns, but it did take longer. So that's how I would start to think about things. If we get a rip-roaring upside, you're probably going to get a nasty downside. If we get this stable climb, I ran a study before. In fact, I've got a piece where I looked at what happens if we go to 150K. What would that drawdown potential look like? It's hard for me to construct an 80% correction from there, right? It's even harder to construct it from 100. So that's the way I try to think about these things. There's a model that I use. A lot of people will be familiar with the realized price. That's the average cost basis per Bitcoin. The problem with the realized price is it includes Satoshi's coins. So Satoshi's always going to be in profit, an unrealized profit. So in order to get to break even, somebody has to have losses equal to Satoshi's profit to be at break even, right? To offset them. But Satoshi can't respond, and Mr. I bought the top can respond. So what I think is probably going to happen is the realized price we've visited it in the bear market in every previous cycle. I lost a bet on this last cycle, but I'm sticking to my guns. I don't actually think we go back down there. I think it has to be really bad for that to happen. There's another model that Dave Puel and I developed called the True Market Mean. It's currently about 65K. That's the average cost basis for active investors, not per Bitcoin, for active investors, people actually participating in the market. My base case is that is probably going to be where we revisit. Now, that won't be at 65K when this happens. It'll be somewhere higher. That's kind of the level that I would be looking at to say that's kind of a max pain level. So I think, if I'm trying to frame these things up, I don't just look and say, well, what percentage could it be? I'm like, well, there's probably a level where people's drawdown will be sufficient that they're going to start putting a floor in.
Gotcha. And now, you know what? I'm so glad that you explained it to me like that, because now your psychology and the way that you've been framing it makes a whole lot of sense. This is why you're saying Bitcoin looks very, very healthy, because from your perspective, you actually want it to build a base at these levels, because it removes the violence. Perhaps not. It removes the probability and the violence of it going down, right?
Correct.
If it consolidates at these high levels. So from your perspective, you're probably extremely happy that we've been going
consolidation is as
at
good as it gets.
$100,000.
Oh yes. This is the thing, right? You want to see capital coming in. Every guy who's selling is matched with somebody who's buying. Demand and supply are the same thing. They meet at price. Now, sometimes there's not enough demand and price has to go lower. But what happens when the price goes lower? It generates more demand, right? Because people go, oh, look, now I can stack more sats at a cheaper price. These are the dynamics that make, and this is why if you let go of trying to predict the market and instead replace it with, and this is how I've done it, I replace it with, I want to see where the incentives are. Show me when
Mm,
the average guy is really looking at his portfolio and going, man, I can buy 6 houses now. That's usually the top. And
yeah,
the point when they're like, my God, my portfolio is absolutely destroyed.
that's
I'm never
usually
owning this thing again. I'm out. The dumb money do this at the same time. They all capitulate at the exact same time. That's a bottom. So I look for the zones where people's incentives get hit. And when those incentives get hit, I then look and see whether they're acting on those incentives. Almost always they're one for one. So therefore I can make a decision being like, okay, there's a lot of people who are really profitable. They're probably taking it. Who's buying those coins? People who are not looking at any of this information and who are going to capitulate to me later down the road.
that makes so much sense. Okay, so now I understand how you make the argument that Bitcoin looks extremely healthy because you're looking at this and you're like, Nico, this is consolidating at 100K. This is unbelievable, right?
Yes.
That it's staying steady at these levels. So that makes a whole lot of sense. Now, we are getting to the top of the hour, and I do want to be respectful of your time. So saving, I think the bit for last that I think a lot of people are expecting, which is what are your expectations for 2025 from a price perspective?
Yes, I mean, I think that there is a very decent chance that I think 120, we'll see 120, and I do think we'll see 150. I think it will take time to crack 150. So that's basically for the foreseeable future. Basically, my range is I don't think we get down to 75, but that's kind of the floor level. I would be amazed if we got down there. I think getting into the mid 80s, I would probably put like a 40% chance on, 30%, 40%. Getting up to 120, I'd probably give like an 80% chance. And getting to 150, I'd probably give a coin flip, right? It's probably 50% odds. Getting to 200 and 300, unless something really changes materially in the world, right? We get some kind of, helicopter money or some shit goes on that's just like pro liquidity. I struggle to see it, but that's too far beyond the foreseeable future that I couldn't speculate on, honestly. So that's kind of my ballpark.
So could you talk a little bit about the helicopter money aspect of it? How important is the kind of QE element to the upside of Bitcoin? Because right, we're still in a QT environment, which I think a lot of people don't realize, right?
Yes.
The inflation rate numbers came pretty high last time. I think a lot of people weren't expecting them to be so high. So we're still kind of in this, the non-helicopter money environment. How important is that environment for Bitcoin's upside potential?
We're chopping sideways at 100K. They're doing quantitative tightening. There's no QE going on, and interest rates are basically as high as they've been in many years. Bitcoin doesn't need QE. Bitcoin's going just fine without QE. Bitcoin's like, and this is so many people. Yes, QE helps, right? If they print double the money supply, of course Bitcoin's going to double, more than double. So I think that's the way to think about it. QE is, I think, essential for shitcoins to have a bull market. You need that helicopter money for that to happen, in my view. Bitcoin has broken free. It's like gold. Gold is
Mm,
going up despite real yields going up. That is a break in trend. There's 5 prices that I pay attention to. The strength of the US dollar, because that is the liquidity belt for everybody else. The price of oil, because that is also the liquidity belt for everyone else. US Treasury bonds, because that's the risk-free rate. And if the risk-free rate goes higher, you get interest rates rising. That makes it expensive for everybody else. So dollar, oil, rates, gold, Bitcoin, because gold and Bitcoin are the 2 fire alarms. Gold's the big boy. When gold's moving, it tells you a lot of information. When Bitcoin's moving, that's a little boy, right? It's telling you what's going on in the more micro time frame. Don't get spooked by the near-term volatility. Gold tells you where we're going. Quantitative tightening is happening and Bitcoin's doing just fine. Shitcoin's not so much. Bitcoin's doing great.
love it, love it. Well, James, always an honor, always a pleasure. Where can people find your work? James's newsletter is called Check on Chain Bitcoin Newsletter. I'm going to put it in the video/podcast description. James, where can people find you on the interwebs?
Yes, so you find me at @_checkmatey on Twitter, and as you said, go to checkonchain.com, one word, and basically it is the Check on Chain Bitcoin newsletter, and the purpose there is that we are a primarily Bitcoin only newsletter. I will touch on if there's like as we've done today, if there's certain market dynamics, but I'm not analyzing Ethereum, I'm not analyzing Solana, I'm not analyzing anything except Bitcoin and the world in which it exists, which is the crypto world, but more importantly, it's the macro world. So it is primarily a Bitcoin only newsletter. And its purpose is just help hodlers hodl. And my thesis was people come in, they think they're a trader, they lose a bunch of money trading, right? This is my journey. And eventually you're like, I just want to hodl this thing. But at the same time, why is it doing what it's doing? Why is it going sideways? Why is it going up? Why is it going down? I just try to help people think about these things before it happens, explore market dynamics as I see them, so that when the market does something, they're like, yeah, cool. That was within my frame of reference and I was prepared for it. And if you're prepared for it, you've already made your decision, right? I don't make calls. I don't tell people where the world's going to go. I'd say all the time, I don't know. But if you can just do those mental loops ahead of time, if it happens, you're like, oh, cool. I know exactly what to do.
Love it. Love it. Well, James, thank you so much for joining me. Appreciate it.
Thank you, mate. Real pleasure.